Welcome to today's section. Today we'll be looking at concept of bid and ask price. But before we start, please do me a favor by hitting the subscribe button and the bell icon. You can also share this video with your friends so that they also get educated and learn how to trade forex. I hope you are enjoying the video from part 1 to this part. So without wasting much, let's get straight to the point of the day. Today, as I said, we'll be looking at concept of bid and ask price. So in every market, we know that there's a buyer and a seller. And the seller quotes a price, and the buyer also quotes the price that he wants to buy it. That brings about the negotiation in the market. So we'll be looking at the bid and the ask price. Now, in forex trading, the bid and the ask price represent the two prices at which participants in the market are willing to buy or sell a particular currency pair. These prices are crucial for understanding the dynamics of trading and executing trades in the forex market. Now, bid price. The bid price, also known as the seller's price. So when you enter the market, first thing that you know is that there are sellers in the market. We are there to buy. Are you a buyer or a seller? So as a seller, the price that you quote, we call it the bid price. So we are saying that the bid price, also known as the sell price or the downside price, represents the highest price that a buyer, a trader or investor is willing to pay to purchase a particular currency pair. Now, it is the price at which you can sell the base currency, that's the first currency in the pair, and buy the quote currency, the second currency in the pair. Remember, we look at what the base currency and the quote currency is in the previous videos. If you don't understand that, please go back and watch that video. So in other words, if you want to sell the currency pair, you will receive the bid price for it. So if you are selling a currency price, you will receive a bid price for it. Now, for example, let's consider the Euro-USD currency pair. If the bid price is 1.2345, it means that someone in the market is willing to buy 1 euro for 1.2345 United States dollar. I take that again. For example, let's consider the euro versus United dollar currency pair. If the bid price is 1.2345, it means that someone in the market is willing to buy 1 euro for 1.2345 United States dollar. I hope that the meaning of bid price is well understood now. Now, let's look at the ask price. As I said, the two concepts move hand in hand. They both move hand in hand. You can't deal with only just one. The bid and the ask price moving hand in hand. So the bid price when you're dealing with sell, and the ask price when you're dealing with buy. So in this aspect, they said the ask price, also known as the buyer's price, the absolute price represents the lowest price at which a seller or trader, investor is willing to sell a particular currency pair. Willing to sell a particular currency pair. I hope you are following. So over here, the ask price is quoted by the buyer or the buy price. So as you are willing to sell a particular currency pair, you will receive the ask price. Now, it is the price at which you can buy the base currency and sell the quote currency. Remember, I told you from the beginning that in forex, you deal with currencies in pair. So as you are buying one currency, you are selling the other. As you are selling one currency, you are buying the other. So that is how it works. You can't just buy one currency in the market. So the two ask and bid price move hand in hand. So they are saying that if you want to buy a currency pair, you will pay the ask price. That is why we learned about the quote, the base currency and the quote currency in the previous video. Now continuing with the Euro USD. Example, if the ask price is 1.2347, it means that someone in the market is willing to sell 1 euro for 1.2347 United States dollar. It means that the person will sell euro, assuming you are the seller, you are holding 1 euro. I have to bring 1.2347 United States dollar in order to take this euro. That is what it means. Now, it is important to note that the bid and ask price are constantly changing as market condition and participants' intention fluctuate. So the ask and bid price are not constant in the market. As buying and selling is happening in the market, these ask and bid prices are constantly changing. They are constantly changing in the market. Now, the bid and ask price quoted by your broker or a trading platform will reflect the best available prices from liquidity providers or market makers at any given moment in the market. So the bid and ask price that you are saying is what is quoted by your broker. It will reflect what your broker has quoted from liquidity providers. So they also make sure to provide you with the best bid and ask prices in the market. Now, let's look at the concept of spread. The concept of spread. In forex trading, the spread refers to the difference between the bid price and the ask price of a currency pair. The difference, the focus here is the difference between the bid price and the ask price. It represents the cost of executing a trade, and it is measured in pip. As I said earlier, in forex, everything we do it in pip. And so the pip is what makes us the money. So it represents the cost of executing a trade and is measured in pip. Now, the spread is fundamental concept in forex trading and plays a significant role in determining the overall transaction cost and potential profitability of trades. The spread is calculated by subtracting the bid price from the ask price, as I said earlier. So for you to get the difference, you have to subtract the bid price from the ask price. Now, for example, let's consider the euro versus United States dollar currency pair. If the bid price is 1.2345 and the ask price is 1.2347, the spread would be 2 pips. I hope that is well understood. So when you take EUUSD, when you take the chart, you will see two lines moving along each other. One is the bid price and one is the ask price. And we are saying for you to know the spread between them, you have to subtract. You have to subtract the bid price. So in this case, the bid price is 1.2345 from the ask price. See, the ask price is 1.2347. The difference here is 2 pips. Remember, we are dealing with non-Japanese yen pairs. The pair we are dealing with, that is why it is in 4 decimal places. When you're dealing with the Japanese yen pair, you know the decimal place to use, which is 0.01. 2 decimal places. It will still be the same 2 pips. So the pips will not differ. It will still be the same 2 pips. So one thing that you have to know is that there are some brokers out there. In our previous video, I explained what a broker means or who a broker is. So you should watch that video before you come here. So some brokers offer a tight spread, or some brokers offer a wide spread. Now, in this case, the trader will need the market to move in their favor by at least 2 pips in to break even on the trade. So what this simply means is that if you are in a trade, if you execute a trade now with this bid price and the ask price, you have the trade have to move in your favor by 2 pips before you will be able to break even. So as soon as you execute the trade, you see that you'll be in a loss of 2 pips. Because they said overall transaction cost and potential profitability. What they are telling you is that the spread represent the cost that you are incurring for executing the trade. So everything there's a cost, right? Everything we do there's a cost or expenses. So trade also involve cost. The cost that you are looking at is the spread. So 2 pip is the loss that you'll be incurring as soon as you execute the trade. So you want to look for a broker that is holding the tightest, like the smallest pip, a spread. Now the different brokers and trading platforms may offer different spread. So it's important for a trader to compare and choose a broker that provide competitive spread, reliable execution, and overall favorable trading conditions. It is very, very important to look for a broker that is well known, recognized, have reputation, and has a tight spread. Now, we've come to the end of today's section. Please, before you leave, make sure that you subscribe to the channel, leave comments, and hit the bell icon so that next video you will be notified. You will be notified. Now, see you in the next video.